Paul, I need a basic explanation to the bafflement last week. Explain to the mere mortals why the yen is stronger given the challenges of the Japanese macroeconomics.
Well, don't forget, it's not just a one-sided equation. You've got to think about what's going on in the States as well, and particularly with capital flow in the United States. Central banks are not buying so many dollars as they used to be buying. In fact, central banks have largely stopped buying dollars, and Middle Eastern central banks are not only not buying, they're actively selling and bringing the money back. And because central bank reserves are disproportionately weighted to dollars, that has created a generally weaker dollar environment. Japan is a current account surplus bloc. That means the price of the yen is basically the price at which Japanese investors are willing to sell their currency. The price of the dollar, as a current account deficit, is the price at which foreigners are prepared to buy dollars. There's an important difference there. The Japanese are a bit reluctant to sell the yen at the moment. They're keeping money closer to home for the time being, and we don't have central banks buying the dollar.
Yeah,
so,
Anne-Marie, bring that chart up again, Anne-Marie. I really want to show this, folks. This is very important, and the distinction that Mr. Donovan makes of selling and buying depending on where you live. Do you at UBS have a tip point where yen strength really begins to create financial instability? Is it 100? Is it below 100? Is it my center tendency, which is 94? Where is it?
Well, one of the interesting things is yen strength so bad for Japan, really? For the Japanese economy, I mean. Because, yes, what it does do, of course, as the yen strengthens, is it eats into the profit margins of Japanese exporters. We know that. But Japanese exporters carry on selling stuff overseas. They don't reduce their market share, they reduce their profit margin. And the problem is that over the last few years, Japanese companies have been using their profits to invest, but not in Japan. There's been this hollowing out process where they're investing outside. So the fact that Japanese companies are making less profit is not necessarily bad for the Japanese economy. And for one group, it could be good, because the one set of prices that do respond to currency moves is commodity prices. That's what changes. Now, let's look at what's happening here. What are we seeing? As the yen strengthens, ultimately we'll see lower energy costs in yen terms, lower food costs in yen terms, and lower imported pharmaceutical prices in yen terms. Who spends most of their money on food, energy and pharmaceuticals? The elderly. So the elderly actually get a better standard of living from this. They maybe spend a bit more money. You can construct a more positive economic argument as the yen strengthens.
Right, but the problem, and I spoke to Mr. Yen, Mr. Sakakibara, and he was saying, so he correctly predicted 115, then 110. He says it will go to 100, and once it touches 105, it's a technical support, so it'll go down to 100. The problem is that you lose control afterwards, right?
Yeah.
Once there's like that economic swaying, are we going to have intervention? And if there is intervention from the BOJ, will it be coordinated with the Fed?
I think intervention is possible. Coordinated with the Fed, I think, is very unlikely, or with, more technically, with the US Treasury, because remember, it's the Treasury, not the Federal Reserve, that makes the decision on intervention in the States. It's going to be, you know, are we going to be using Treasury reserves? Right. Currencies are always a matter for the Treasury. It's the Fed's standard line. Why does that matter? We're in an election year. Do you really, with 4 protectionist candidates in the States, 2 Democrat, 2 Republican protectionist candidates, do you really want to be intervening in the currency markets in this environment? Politically, you've got to question that.